Good morning and welcome to the Mortgage Market Update with Rob Chrisman. Please let me introduce the president of CAMP, Ms. Audrey Boissonneau. Audrey?
Good morning, everyone. Thank you so much for joining us. Happy Tuesday. I would just like to say thank you, as always, to Megan Jackson, whom without we couldn't put these on, and Kevin Casey, who is our president-elect for CAMP. And just to remind you of our upcoming events that we have planned. So next Tuesday at 11, we'll do our normal mortgage update. And then on June 18th at 11, we're going to do a webinar with Freddie Mac. So you'll be able to ask some questions directly to the source. And that same day at 5 o'clock, we're going to do our, what is now every other Thursday, our social hour and brainstorming mastermind sessions. So please look for those updates. And remember that you can ask questions as we go through this. Make sure that you're a CAMP member, please. It is an organization run mostly by volunteers, and without your memberships, we are sunk. And with that, I am very excited to introduce Rob Chrisman, who is an absolute industry icon. He's been around since the dinosaurs walked the earth and is a wealth of information and is obviously using a very special backdrop for us today. So I haven't seen that as an option on a meeting format to have your car back seats in the view, but Rob.
Audrey, can you hear me all right?
Thanks for going out for us.
Can you hear me all right?
Yes.
Yes, I can.
What you don't see are the two highway patrolmen sitting in the front seat. I'm actually in the back of their vehicle, but they've allowed me this time to chat. So then off to the Hooskow.
We bring quality speakers onto our show, so you know we've definitely hit a new high this morning where our speakers in handcuffs in the back of a patrol car. So thanks, Rob, appreciate it.
To catch a thief.
So no kitty cat this morning?
No, so I'll dispense with the pleasantries. What happened was I was asked to golf for the first time in probably 30 years. And that was this morning, and I knew I had this event, but I knew I wanted to golf with some friends, and so that's why I'm in the car in the parking lot in the shade. So I apologize for the backdrop, but there's no animals here in the car, and I shot terribly. But
and no
it was
Shannon.
fun.
Shauna. Oh, you shot terribly after 30 years. Wow, what a surprise.
I know.
All right, well, share your.
Unless there's like the windmill going around or the anthill, I'm out of my element.
Right. Well, I just want to know, since you've been golfing all morning, whether you're sober at this point. So.
Oh, absolutely.
Yeah, don't lie. All right, so take it away, Rob. And again, people ask questions through the chat bar like we usually do, and we'll be happy to ask Rob what is on your mind too.
Well, the interesting thing, mortgage banking is always interesting, and frankly, we headed into 2020. It was the best of times, right? Rates were low, the economy was doing well, pipelines were full. December, January, February, people wanted to buy homes, and loan officers were working hard. And then, of course, the virus came along in mid-March and basically upended so many parts of the economy, but not so much mortgage banking. Yes, we had some dramatic change, which I'll talk about here in a few minutes, but frankly, things have calmed down. And mortgage, when I talk to mortgage lenders, and yesterday I spent the day with a couple CEOs. I talk to loan officers all the time. Things are very, very good. If anything, good loan officers are being overworked, working 12 hours a day and complaining about it. But nonetheless, what we've moved into here as we enter mid-June is a situation where rates are still very low. Some of the margin compression is coming out. A lot of margin was added back in March and April just because the market was so volatile. And so the margins are starting to shrink a little bit, which doesn't necessarily help companies, but it does help loan officers who are trying to, help their borrowers. And the products are starting to creep back in here in mid-June. And so what we're seeing is, once again, a very good time to be in this business. When I talked to realtors, and I spent a couple days ago, I spent a couple hours with one, kind of talking about the market and being 6 feet apart and being social a little bit. And she was telling me that her business is good. Her listings are there, and granted, she's not, the business isn't coming out of the woodwork, but she has a decent amount of listings, probably more than she had in November and December. The sellers have figured out a way of showing their homes. The price, there's price wars that are still going on, bidding wars, I should say, that are still going on in several markets around the United States. And so the environment is actually pretty good, all things considered. And now we have the economy, or certain counties or certain states or certain whoever, depending on where you live, coming out, reopening. And the jobs number that came out Friday, there are a lot of naysayers out there who say there's going to be a big revision come first week of July, because the number that we saw Friday wasn't right, was incorrectly calculated, whatever you might want to say. But nonetheless, the doom and gloom that so many people have been predicting has not happened yet. Some will argue that it's not going to happen at all as we start to see the economy reopen. So right now, things are very good from what I'm hearing from originators and from CEOs. Volumes are good, margins are okay, the volatility has come out of the market, rates are good, and now you have right now loan officers waiting for some of these programs to come back. For example, jumbo. I think they're in the industry that we'd like to see a little more correspondent interest in the jumbo side of things. And then non-QM, those lenders or investors who specialize in non-QM are waiting for the CFPB to put out its proposal to differentiate non-QM versus qualified mortgages. It is thought that they will do away or propose doing away with the 43% debt to income ratio and suggest something much more based on ability to repay or reserves, how that borrower has paid their loan in the past and so forth. So the industry is waiting for that. And the industry is also waiting for Ginnie Mae to fully address e-closings and e-notaries. I think that'll be a big something for FHA VA lenders to watch for, and they are watching for. That's supposed to happen any time now. Ginnie Mae or HUD is supposed to come out with that announcement. So, overall things are pretty good. Things are good. If somebody had been in a coma, say 6 months ago, and woken up now, think of everything they would have missed. Tiger King. Think of everything else they would have missed. They would have missed the worst of the home, stay at home, the quarantine. People are starting to come out. Restaurants are opening. So from what I'm hearing, things are pretty good out there right now. What are you seeing? Let's get your input. I mean, you're in the trenches as well. Are you seeing some little bit of optimism and smiling faces there on Zoom, on your Zoom calls?
I definitely, I agree with you 100%. So, you forgot to mention rioters and looting. I came into a boarded building this morning. It's been boarded up for over a week, but apparently I'm going to be able to leave through the regular door today. So apparently it's going to be unboarded. So we are making progress. And yes, so I did some poking around this morning just to make sure that we're up to date on everything. And so I checked on appraisals. So appraisals are definitely just sort of the status quo, what we've been used to for the last couple of months. No big changes. Turn times, it sounds like, are around 7 to 10 days. In general, it varies very much from county to county from what I'm being told. But for the most part, we've adjusted to the shelter in place requirements and are not having the problems that we were having before. And there is everyone's just embraced whatever the guidelines were. I have a client who I actually talked about it before. We got 2 of his investment properties refinanced before all the hit the fan. And the 3rd one, though, he had a triplex, and 2 tenants said that the appraiser could come in. The 3rd one said no, so we were stuck. So he called me again yesterday going, all right, can we do it? Do I push it with the tenant yet? So, I mean, people are still interested in getting their transactions done. And for the most part, we can do that. But I also think that as an industry and as mortgage professionals, we've really embraced that we just have to communicate with people. This is what I can do today. This is what I can't do today. But wait, it'll come back probably. So just hang in there. And so having really clear conversations with our borrowers has always been the key. It remains the key. And I think more and more of us are getting better at it. So remember in the old days where you get a list of conditions and you do everything you possibly could to not have to burden your client with it. And now I'm
Right.
like, dude, you want the money? Give me what I'm asking for. If I don't need it, I'm going to tell you, I will have already figured out whether I don't need it. But if I'm asking you for it, you better cough it up or no money. So
Right.
it can be simple if you are cool with that. So we got a comment from someone where
Already?
yes, I know. People are listening to you, Rob. Can you believe it?
I'm not, but I want to say something else. I want to say something else.
All right.
And I say this when I talk to groups of people, and I'm not just blowing smoke, as they say, but the last 3 months have once again proved to me, and I've been saying this for years, that the loan officer is not going the way of the blacksmith or the lamplighter or whatever occupation you want to pick that we don't hear about so much anymore, because borrowers have consistently shown that they need somebody to hold their hand, for lack of a better term, and originators tell them repeatedly, they aren't going to get this kind of service just by typing in mortgage on the internet and seeing what pops up and talking to somebody who's making $12 an hour in some basement somewhere. Borrowers really have seen how skilled loan officers now earn their money and can keep them up to date on the changes. And the good loan officers out there aren't afraid to share bad news. I mean, borrowers can take it. And
That's right.
with all the, hey, you can't go in a restaurant for 2 or 3 months. Well, compared to that, finding a document or having to sign something is small potatoes. So
That's
compared
right.
to everything else and all the social unrest and civil unrest problems that we're having now, loan officers are repeatedly showing that they can figure out a way to help borrowers. And I think that is lost in the mainstream press. I love to say that it's lost in the mainstream press. I mean, I write about it, but you don't hear about the role of the loan officer as you should. And originators are earning their money. Like I said earlier, they're working 12 hours a day, 7 days a week, and complaining about it, because if you didn't give a loan officer something to complain about, they're going to find something. It's like, I gotta work, I got all, but the incomes are good right now. I mean, the pipelines are full, and things are pretty good. I think the one cloud on the horizon, unfortunately, is the civil unrest and what impact that may have on borrower psychology and overall society in general. It'll be, I mean, I hope the best. We all hope for the best, and we hope for some strong, reasonable leadership to it's not an easy problem to fix, but we hope for some kind of resolution. So I think that obviously is impacting a lot of people's moods around the nation and a lot of potential borrowers. So hopefully that gets fixed sooner than later, and we can move on with things. So anyway, what was the question somebody had, or the comment?
I was just going to say that I think that ultimately when people want money for either a refinance or anything that they're doing with cash out, or they want to buy a house, regardless of what's going on in the world, if they have a job, if they have the ability to make it happen, they're going to make it happen. And it feels like what's going on right now is moving in a positive direction. I think that I think we're going to make strides forward through all this. And again, mortgage professionals have always been extremely resilient. We have gone through more crap in the 30+ years I've been doing this, and we always figure out a way to make it work. Like, so we do that with our borrowers, we do it on our transactions, we do it in every situation. So, and that's why we are going to win over a computer. Just because if something is some issue comes up for a borrower, they want to know that we're going to think of a reason or a way to get through it and get to where they want to go, whether it's today or in a year or whatever. They need a human. So, and the statistics back that up. So they say that 70%, not of millennials, 70% of people shop online for 2 weeks before they want to talk to a human, and then they want to talk to a human. And so my millennial clients, I freaking love them, because they'll go and do a bunch of research, and then they come to me and they want that human contact, but they ask really good questions, which I think is cool. So ultimately, I think we're in good shape. I know I've been accused of being Pollyanna on occasion, but I am very real also. So I'm not just, picking out the good stuff and overlooking the rest. There's a lot going on. And what is interesting about your comment was it was actually tied into a comment we got, which was, I love how much mortgage professionals have really buckled down and educated ourselves and come together to better educate each other during these crazy times. And that could not be more true. The camp has really stepped it up, and we've been putting on 2 to 3 webinars a week, and we have had tens of thousands of people show up for them. I mean, it has just been overwhelming. And I'm always so impressed with the numbers of people that we have on our calls who want to know what is happening out there so that they can take care of their clients. That's what they're doing. They're not doing it because it's good for them. The people who show up for this, it's for their clients. That's what they're doing. So it's really good. And I want to circle back to something you said in the beginning, because you referenced mortgage bankers. And I want to be clear, when you're saying mortgage bankers, you're talking about wholesalers who work with brokers as well, right? Just
I'm talking about the whole kit and caboodle.
Whole kit and caboodle. Got it. Just want to clarify that, because that sometimes can get lost in the shuffle. And I want to make sure that, I mean, all segments of the industry seem to be doing all right. And we're all adjusting, figuring it out, and it is starting to loosen up, right?
Yeah, I was just before I joined in the call, I was telling the 2 officers who were sitting in the front seat in front of me that thing, they should refinance. In fact, I gave both of them your name and number. Hope you don't mind. So you
if
get
we do a background check, we should be all right. So thank you. So somebody's asking, have properties been appraising for the values or lower amounts? Do you have a comment on that? And if you don't, I do.
That's shocking. So the no. I am hearing that appraisals are coming in at or near value. I posted on Saturday. I was talking to a realtor friend, Chet Goad, who told me that, and he specializes in more. He used to be a loan officer, by the way, but he's a realtor now, real estate agent in Montclair, Oakland, Berkeley, Albany, in that area. And he said that more homes above 4 million, 3 million, 4 million, have either sold or are pending this year than at any other year's worth of data in the past.
Wow.
Now, we could sit here and talk for a while about the reasons for that, about people, they don't like pushing an elevator button to go home, to take their family home. They're tired of a 1-bedroom apartment in San Francisco or a 1-bedroom condo, and both of you are working from home and it's shoulder to shoulder, and they want a yard, or they want to do something. Working from home is allowing, a renewed escape into the suburbs, whatever you want to call it. But he was saying that values are holding in very, very well. And it's important for folks on the call to remember, and I keep making this point, that we are in a great position to help people this time around versus 10 or 12 years ago when we were to blame for what's happening, some crisis. Now we are in a great position not only to help people, but to to create a bridge or to help us move forward. And that's a big difference than where we were 10 years ago. Right now, I'm hearing that property values are holding in. It's also important for people to remember that the last time around, 2008, 2010, that took years, years to unfold. What are we in the 12th week here, the 10th week? I don't know, whatever it is. It's been like 3 months really since mid-March when all this started to hit. It's been very, very fast. But
right.
the people who wanted to buy a home in December, January, and February, early March, they still want to buy a home. Can they get into the open house? Can they view it virtually? Yeah, realtors are doing that. Sellers are doing that. But a lot of sellers don't want to put their house on the market. So some people say, well, Rob, the supply demand equation is inflated because the supply isn't there. People are holding their properties off the market. Yeah, that's happening in some areas. But for the most part, the answer to your question, I'm hearing values hold in very, very well. And so what are you seeing?
I'm seeing the exact same thing. So I have had, out of all of this, I've had one appraisal that came in a little low, and they cited declining values, and I'm like, wait a second, that does not sound right. So, well, and I'm saying that nicely. The way I really said it in my head and out loud was a little spicier than that. But I am never one to just take something lying down. So I did some poking, and I'm like, okay, that is total. And I rebutted it and won. So my suggestion to people is do not accept that. I mean, make sure you're right before you go pushing it, but it is probably somebody who is taking the easy way out, and you may be able to get yourself out of that value and rebut it if your lender is any good. So I'm seeing multiple offers at all sorts of price points. Very well qualified buyers. The other thing that I think is really interesting, I'm getting a lot more calls from people because now if they want to go into a property, they have to be pre-approved. Like they have to have an approval letter. So it's sort of like when they were selling short sales and they made everyone go get a pre-approval, except this time it's different. I think it's going to be interesting to see if we stay with this or whether it goes away once COVID is over. You're making me dizzy. Stop moving, Rob. Jeez Louise.
All right. Sorry.
Anyway.
The handcuffs.
Right.
Shake.
Are you squirming? It's uncomfortable, isn't it? Anyway, so it's going to be interesting to see if the realtors stay with this whole pre-approval process or if they back off of it eventually. But right now it's all working. Like it's working. People are adaptable. When they want to do something, they do what they got to do to make it happen. Right. So.
Absolutely.
Yeah.
Absolutely. I was a while back, I was talking to a loan officer who may be on this call, Sonia Wong.
I love Sonia.
Sonia, yes, it's Sonia's birthday. Sonia's birthday is tomorrow, by the way. So
nice.
Sonia, if you're listening, happy birthday tomorrow. And she kind of embodied kind of this do or die, go getter, I'm here to help the borrower kind of mentality that I'm seeing in different parts around the nation. I mean, she's like, she's working hard and she's helping people. It's not only purchases but refis and to your point earlier, kind of doing what it takes and overcoming obstacles and so forth. And people like Sonia and others that I'm sure are on the call provide so much value for borrowers when it comes to appraisals. It's like, okay, appraisal business, okay, loan officers, the appraisers can't go in the house. Well, let's figure this out. Hey, Rob, I get emails. Hey, Rob, and I think I put this in my commentary. All people have to do out there is put the last 4 digits of the zip code in the property address, and they're almost guaranteed an appraisal waiver. I'm like, really? Okay, well that's good to know. Put in the last 4 digits of the zip code and get an appraisal waiver. So there are ways, life hacks or whatever you want to call them, that we as an industry are very good at, and there's a lot of very clever people in this industry who are helping their borrowers in different ways like that. So appraisals appraisals and coming in at value or near value is one of those things that we're adapting to. So
Absolutely. So we have another comment from someone who said, when I spoke with a refi borrower prospect yesterday and told him the refi rules after deferment, he was so happy. He was in deferment, but going back to work next week. So again, I think that as all of this has evolved and deferment and forbearance, et cetera, have gone through the different stages, we're getting a little more clarity on how it's going to look on the end. We're still waiting for them to tell us when the forbearance period will end. And I think that will help free things up as well, or further. But I love it that somebody's talking to their borrower, telling them what the deal is, and just making, and they're like, it's such a relief. So that's great news. So here's a question for you, Rob. They want your take on when QM, A paper lenders like Wells, et cetera, will come back into the market and actually be competitive. And let's just make sure that we're stating on the correspondent side, not necessarily on the retail bank, which we hope that they continue to make that as difficult as possible for everyone for the duration. That'd be great. But on the correspondent side, where you could send something to Wells or any jumbo A paper lender, tell us what you think.
Are we talking about jumbo or conforming conventional government stuff?
Jumbo. Let's stick with jumbo right now.
Jumbo.
No mumbo. Just jumbo.
I think that was a line. I think that was a line out of Lion King. Jumbo. But anyway, so as you might recall, back in March, I'm not going to rehash March, but I think it's important for people to keep things in context and perspective. So March, suddenly COVID is sweeping across the nation. The stay-at-home orders are issued. What is this going to do to the economy? The investors of every kinds of security panicked or fled or sold or whatever you want to call it, and became very volatile. The stock market sold off, and the warehouse banks grew nervous, and it was clear at that point that the government was going to focus on, if the government was going to focus anywhere in mortgage banking, it would focus on government-backed programs, Fannie, Freddie, FHA, VA, and so that leaves kind of the state bond programs out there and the jumbo programs out there and the non-QM programs out there. And so the warehouse banks grew nervous, and the investors in mortgage-backed securities backed by non-QM and backed by jumbo, frankly, grew nervous as well because it doesn't have that government attention. So all of a sudden, the non-QM investors bailed on a Thursday, March 19th. Jumbo was the following week. As investors pulled back, as warehouse banks pulled back on their lending to non-governmental programs. And then with the CARES Act, the servicing market got whacked. Went from servicing worth a point down to being worth 25 or 0 or whatever it might be because of forbearance and what was going to happen with forbearance. I'm a servicer. Am I going to have to pony up hundreds of millions of dollars to make sure the investors get their money? Well, Fannie Mae and Freddie Mac through the FHFA have made great strides, and HUD and Ginnie Mae have made great strides in comforting servicers and comforting lenders, originators, and comforting investors in those securities that the sky isn't falling, that we're going to stand behind, we're going to stand behind some of this stuff for certain periods of time. Well, the issue is that that has not happened with non-QM, and it's not happened with jumbo. And if you think about where non-QM loans were going, most of them were being securitized. The jumbo side, not so much. The jumbo side of things, most of those loans are portfolio loans that go into Wells Fargo's coffers, Chase's coffers, Citi's coffers, B of A through the retail channel, and so forth and so on. So you have to remember that when you're dealing with a correspondent investor, let's just take Wells Fargo, for example. Wells Fargo puts those loans in their own portfolio and they're on their own books because those are great clients typically. Relatively low loan to values, 80 or below typically. You had a situation where they could cross sell, they could get those clients, typically oftentimes doctors and lawyers and so forth. And so the you had a situation where they, for example, Wells Fargo took a look at their uh, took a look at their took a look at their uh, uh, at their book of business, shall we say? Sorry, and and said, you know what, we have enough loans coming to us through our retail channel that we don't have to go out and buy these loans on a correspondent basis, because the government's not going to stand at this point. Is not standing behind jumbo. It's not standing behind non-QM. And we, like I said, have enough business coming through our retail channel. We don't need them. The second thing to keep in mind, for example, with Wells Fargo, is that some years ago, as a penalty, the government put a cap on their ability to hold assets. And for them, remember, for a bank, a deposit is a liability, a loan on their books is an asset. And the having a cap on their assets limits the amount that they can have on their books. And so when you have commercial loans coming through, when you have loans coming through your own retail channel, you don't have to reach out and grasp and try to get jumbo business through the correspondent channel. So Wells, in effect, said, hey, government, and I'm really simplifying this quite a bit. We could talk about the Treasury Department, the Federal Reserve, whatever you want to talk about, but hey, US government, you've handcuffed us here, all right? You've limited our asset size. We're in the penalty box. Take those handcuffs off and we'll start lending again. So the government removed, to a large degree, the asset caps that Wells was under. So Wells, the sun came through the clouds and so forth and so on, everywhere pretty much except with jumbo loans. It's a long way of talking about where Wells stands now with jumbo production. I would imagine, if I had to guess, if we had Peter Delaberti sitting here next to me in this paddy wagon, that he would say that Wells, from a banking perspective, has enough assets coming in their door right now through their retail channel and through commercial lending, through credit cards, through small business loans, that they don't need jumbo through their correspondent channel. Will that change? I think when business gets a little tighter, it will change. Then the question is, when is business going to get tighter? When are volumes going to slow down a little bit? When will things change? I'm already seeing a little bit of that. I'm hearing that volumes aren't flooding lenders like volumes were, say, a month or two or three ago. Things have slowed a little bit. When things slow a little bit, companies get hungry to support their machinery. And so you have correspondent lenders, not so much on the jumbo side, more on the Fannie Freddie, FHA, VA side of things now, starting to lower their profit margins a little bit to keep the machine going. Not dramatically so, but it's starting to happen. And I think another month or two, if I had to guess, I think that Wells will take a look at their book of business and say, you know what, we need to bring in a little more business, and so let's roll out jumbo again, because jumbo is a good product for Wells Fargo and Chase and other correspondent investors. TIAA, Luther Burbank, PenFed, so forth. An independent mortgage bank, if you are a loan officer in an independent mortgage bank, or if you are a loan officer at a broker shop, for example, in the broker side of things, there are outlets for jumbo loans. You can get a jumbo loan. The market is not seized up entirely. It takes a little more work. The loan to value might be a little less than, say, 4 months ago, 3 months ago, but you can get it done. And so, but going back to the question, when will it come back to where we were, say, in January and February, early March of this year? I'd give it probably another 2 or 3 months when volumes start to slide a little bit more. A lot of people who could refinance did refinance, and so that's my take on it. I mean, Audrey,
Wow.
if somebody came to you and wanted an $800,000 loan, could you get them that loan?
Yes. Do they want the pricing? Probably not today, but I've just been telling him to wait, and I like your timeline. I mean, 2 to 3 months. So we're going to have you back on September 9th, and we're going to see where we are on that date, and see how your crystal ball was working today, because that's a pretty aggressive timeline. So that'd be great. I hope so. What do you think about Redwood? Are they going to come back, or are they gone for good?
Redwood is, and I don't know if anybody obviously from Redwood is on this phone call listening in. I will say that Redwood disappointed a lot of people when they did some of the things that Redwood did in March. And you're the first person who's asked about Redwood. I would say that to the extent that they can, uh, brokers or lenders have put people or have put Redwood in the penalty box to some extent. They're not in a great hurry to, like, if Redwood were to come back next week and say, hey, remember us guys, build up your pipelines again so we don't have to buy them, or we can, like, people burn me once, shame on me, burn me twice, shame on you, kind of thing. I don't know how anxious people are to do business with Redwood, frankly. I don't know.
Well, I don't think they're the only ones, though. I know of a few notable non-QM lenders who did the same thing. And I have a realtor that I work with who had an offer, and I swear to God, I told him, I said, it was like in the beginning of all this crazy, and he got 8 offers on a jumbo place, and or on a place that would have been that was a jumbo loan potentially. And I told him, I said, right now, I mean, everything is closing up. You take the best, easiest, close, shortest. If you can get all cash, take that and run off the cliff with it. And of course, what did they do? They went with the highest price, had to go to Wells Fargo, blah, blah, blah. Wells Fargo let that thing go all the way to docs and then pull the plug. All the way to docs on a perfect borrower. So we have short memories, and we end up chasing price a lot of times. So my suspicion is, if they come back and they say, hey, you know what, we're going to give you a chance against our retail outlets, we're going to take it, because we are just that way. Don't you think?
Absolutely. If Taylor Swift breaks up with me today, and then she calls next week, I'll talk to Taylor. I'll go right back to the trough. I'm not calling
You start
Taylor.
talking to Taylor, Sean and I are going to beat you. Okay, so let's move on. So high balance. We get a lot of questions about high balance, and I keep talking about the de minimis, which most people had never heard of. And just a reminder that we can have 90% or 10% of the pools that are the loans that are sold to Fannie and Freddie can be high balance. Otherwise, the prices go way up. And so here's the actual question. What is happening with high balance conforming interest rates? What are other lenders seeing in rates between loan amounts of 510 and 765? So talk to us, Rob. Tell us, can we fight FHA on the de minimis as they're trying to get out of conservatorship and go private? What do you think?
FHA?
I'm sorry, FHFA. It's
Okay.
not what I said. It's what I meant to say, Rob.
I know. I'm sorry.
Try to
So start all over. No.
Okay.
So I think so. Keep in mind what's going on with Fannie Mae and Freddie Mac, and we'll just talk in terms of Fannie Mae and Freddie Mac.
Well,
So
that's
Fannie
a
Mae and
question.
Freddie Mac,
So they're asking about conservatorship, so you can wrap it all together.
I'll try a little bit, because borrowers probably don't know the difference, but obviously brokers do. The Fannie Mae and Freddie Mac have been in conservatorship since 2008. Okay, ever since 2008 and a half or 2009, they've been trying to figure out ways of getting Fannie Mae and Freddie Mac out of conservatorship, more on their own footing, out from as much a part of the U.S. government as they are. So Ed DeMarco, Director DeMarco, I'm sorry, Calabria. Boy, I'm dating myself on that one. Director Calabria is no great friend of Fannie Mae and Freddie Mac. All right, it's like putting an oil lobbyist in charge of the EPA. Oh, wait a minute, they did that anyway. So you know, we won't go down the political path here too much, but Calabria is not a friend of Fannie Mae and Freddie Mac, and his history has shown speeches and snippets and articles and so forth where he said, the mortgage market needs to have more private, capital coming into it, less government assistance, and so forth. So now we have a situation where Director Calabria is in charge of the Fox is in charge of the hen house, as it were. He is not a friend of them. He is a friend of shrinking their footprint.
Right.
So, new paragraph. We have a situation, we have a crisis. We have the COVID-driven economic crisis. And there's a saying about no crisis should go unwasted. Don't waste a good crisis, Rahm Emanuel said back in, I think, 2008. So he has used this crisis as a way of shrinking Fannie Mae and Freddie Mac's footprint. Oh, let's put a 7-point hit in place for cash out refis. Really, 7 points? How about 5 points for first time home buyers? Wait, what's wrong with first time home buyers? Oh, let them go to FHA, let them go to VA, let them go to Angel Oak, I don't know, Citadel, Sprout. So Director Calabria has used this as an excuse to shrink their footprint. You ask about high balance. So SIFMA, in its infinite wisdom, who oversees the securities market, put in this 10% cap, like 10% of any security can have high balance loans. Director Calabria was probably the last person to ever say, let's expand that 10%. Can it be 20%? Can it be 30%? You have a situation where, you have this bi-coastal dichotomy. People on the East Coast and people along the West Coast would love to see more high balance stuff. But does it help mainstream America, Director Calabria? He would say no. Everything from Nevada to West Virginia, they're fine. We don't need this high balance stuff. And in fact, increasing the liquidity and improving the pricing of some part of Fannie Mae and Freddie Mac's business really isn't in my wheelhouse right now. Right. Period. Next topic. So
I know it's not a popular question, and I know that it is unlikely, but I feel like in the event that they aren't taken out of conservatorship, and that we should at least keep throwing it out there just in case at some point there was a window that we could push something like that through, because it certainly impacts all of us, and it is impacting more and more people across the US. I think there are other parts of the country. We talk about the sand states, right, where we need high balance. We need to have better programs for those loans. But I don't think we're alone anymore. I think there are plenty of other markets across the country that it's starting to be an issue. So it'll be interesting. And I keep asking the question, how different would the response to COVID in the mortgage market been if Fannie and Freddie had already been privatized? That would be, I think, an interesting conversation and something that should be considered, because I feel like the response to COVID on the mortgage end was so much healthier, even though they did a number of things that were not right and it wasn't entirely perfect. It was so much better than 2008. And so what would have happened differently? And so let's assume that we will have some crisis in the future, and then what happens? So I think those are things we need to keep talking about as an industry and not get so caught up in our regular lives again that we forget to ask important questions and stay on top of this with our legislators, with our regulators. Just again, be engaged as an industry and make sure we don't forget what can happen.
Right. Yeah. I mean, CAMP or the California MBA or the NBA or National Broker Association. I mean, there are associations out there that are trying to enact change. Joe loan officer calling up, their congressman isn't going to do a lot of good. The change
Hey,
that
hey,
has to
hey,
happen.
don't tell people that. We're always telling them to respond to the calls to action, for God's sake. So if
No,
enough of us respond, it helps.
yes, but when a
One
body
person is not enough.
when a body like camp goes to a regulator or goes to the government and says, look, we have this many members and here's what we think. All right.
That's right.
I think it has weight. I mean, it has some weight. Your organization has weight. And the but what you have to keep in mind is there's two different ways to enact change. I mean, yeah, I'm really simplifying it, but legislatively and through the regulatory process. And right now, legislatively, to try to get Congress to I mean, they don't know what a high balance loan is. They don't know. They barely know what Fannie Mae and Freddie Mac are. To get them to change anything, it would be a near impossibility. Where you have to work is through the securities administrator, the mortgage-backed securities, the entities that regulate that, through the broker dealers, for example, and through the MBA, who will, who deal with regulators and so forth, and through the National Brokerage Organization that is able to say, we've got, 8,000 members and we vote, that kind of thing. That's how to enact change. It's not so much, I mean, yeah, the call to action helps. And in fact, California, I think you might want to talk about the California situation, what's going on with AB, what is it, 2501 or
Yeah.
so there are ways to enact change. It's just a matter of where to do it and how to do it. So what is going on with that terrible piece of legislation that I know you're following?
You mean where they're trying to make it so that somebody can't be foreclosed upon for 5 years? You mean that one?
Yeah.
Yes, there are a lot of conversations going on right now. We're working on it. NAM is working on it. NAR is aware of it, and we're trying to connect with CAR on that as well. They're aware of it, but it wasn't at the local level is what we have found. So we are working on putting together our position on that. We should have that done shortly, but yeah, it's just a terrible piece of
We heard
legislation.
last week that Fannie and Freddie went in and talked to them and asked them to change the legislation, and they said they would, and then they undid everything right after they left. So
To be clear, it's not Fannie and Freddie, just have to make that important point. They're not allowed to comment on the legislative side of things, but FHFA is. And so that is, it is what they want to hear and what they do are two different things. Oftentimes that's where our voices are really important. And it's been interesting because the local governments through all of this have become even more active than ever. So they've taken all that the state and federal government have put together as protections for the consumers, and they just want to run off the cliff with it. The problem is that the tenants' rights groups, there are certain associations who are very active and very, very strong, and they are all over this stuff. But there's a lack of understanding on almost all of their parts as far as how the industry works and how it all connects. So they don't understand that if you do a foreclosure moratorium of any kind, you're going to limit lending in the state. So either it's going to go away, investors aren't going to want to be part of it, or the pricing is going to be so out of control that it will make it onerous for the borrower. So yeah, we're on it. Everyone's on it. But, getting these people to listen it takes a lot of voices. So that is why we keep shouting, please be a member, please respond to the calls to actions, please, do something and forward it, by the way, send it to everyone you know. So you don't have to be a CAMP member, a NAM member, a CAR member to respond to a call to action. It can be anyone in your sphere, anyone in your family who understands enough or is able to click buttons, frankly. If you just say, listen, this is really important, it takes 30 seconds, click, for God's sake. It helps. It really does. So, yeah.
Good.
Oh,
You're on top of it.
We're on top of it. So we are, God, I don't know how this time goes so fast. I don't know how it seems to you, Rob, but every moment with you just flies by because it's so magical. So we have a few
Did you hear
more.
that, officer? Hear that, officers? You know?
What? What? So we're getting some questions on forbearance. We always do because it's a big deal. So what is the update on forbearance? Do you have an update? I know we're waiting for them to close the forbearance window, and we had a whole credit webinar. Was that, I don't know when that was. Was it a week ago or 2 weeks ago or 6 years ago? I don't know, recently. And it was interesting to see how people are reporting and how you really have to watch it because there are some mistakes happening. So do you have any comments on that, Rob?
I don't.
No?
How
Really?
you like that?
Wow. To whoever
We're never
whoever
having
sent
him
that
on again.
question, you finally shut him down. Good job.
Well, the forbearance question, it's still up in the air. We aren't. I mentioned this. Maybe I mentioned it today or yesterday. I mean, the forbearance. I mean, the questions that are out there and the uncertainty. It's going to last for another year. It's once again you have a situation where two people are looking at the same thing and seeing two entirely different things. So every week, the MBA comes out with its statistics on Tuesday, I think Monday afternoon. Oh no, those aren't good enough. We've got Black Knight statistics. Oh, well, I want to pay attention to the MBA statistics. Well, I want to pay attention to Black Knight statistics. Well, which one's right? Which one's wrong? What does forbearance mean? If a borrower, if Kevin requests forbearance but keeps making his payments, is he in forbearance? Should that impact his credit report? I mean, there's a lot of vague things that are going on out there right now. The FHFA and HUD have done some things to clear them up. I know that your organization, others have told the entities out there are more questions to answer. So I can't at this point really answer any of the unanswered questions, other than to say I know people are working on it. But with regard to forbearance and its impact on the housing industry and lending industry, we won't know some of these answers for, like I say, another year, because so much can happen. The quicker, obviously, the economy comes back, the more or the less we have forbearance-wise to worry about. Wouldn't it be nice if we just bounced right back up and didn't have a recurrence, and everybody started making their payments again? And the geese started flying north for the winter, and cats started sleeping with dogs, and I regrew my hair. There's all kinds of far-fetched things that are going on out there. But with regard to general forbearance, I mean, there's a lot of questions. It's a work in progress. And in our defense, remember that the CARES Act put this forbearance thing out there. It was Congress and the president who said, "Oh, by the way, mortgage industry, I know that you were the villains last time. This time you can really help us out, and we're going to put this forbearance clause in here, and you guys need to figure it out from there." And so now we're dealing with the aircraft carriers of Fannie Mae and Freddie Mac and HUD, who don't turn on a dime, having to come up with things and answers and so forth, and policies and procedures. I mean, it's been in some cases remarkable how we as an industry have been able to answer some of the questions and some of the situations that we've been handed in the last 3 months. So, it's forbearance is a work in progress.
So I'm getting some comments about whether about servicing. So in answer to the question about services adding people to forbearance without them requesting, yes, we are hearing that all over the place. There are a few notable lenders who seem to be famous for it, but yes, it's happening. We discussed it on our credit webinar with the folks from FICO and from the National Credit Reporting Association. And so it seemed to me that they're really using the coding that is typically used for, not typically, that is used for natural disasters. So if you live in a state that has hurricanes or fires or any of those things where you often have natural disasters and that those policies kick in, that's what they're using for this. There is an absolute discrepancy between how they're coding things from lender to lender, from servicer to servicer, I guess from servicer to servicer. And so you really have to watch out for your clients. And there are ways for you to dispute things, et cetera, and get them off the credit reports, because even though the coding may not be impacting their credit scores, they are impacting their ability to get approvals in the automated system. So that's an issue. As far as the lenders who are putting people into forbearance without being asked to put them into forbearance, again, they have to go back to the servicer and say, hey, I don't want this. If they keep making, often if they're put into forbearance, they lose the ability to make their payments. So they have to fight that. So it's going to take some energy on your borrower's parts. It's going to take you educating your borrowers as to what they should be doing, but keep a lookout. So,
So I know we need to wrap things up, but this is an example of why a simple law is hundreds, if not thousands of pages long, because there are so many variables and so many if-thens and if-thens and if. I mean, you just went through, half a dozen examples. The borrower doesn't want forbearance, but the lender puts them in forbearance. What does that mean? Does that impact their credit report? How do they get off their credit report? I mean, there's so many variables that are in these things. It's just crazy.
And the back end of this is what's going to be interesting, because we're not even there yet. So, once somebody has come out, let's say they did go into forbearance, they did miss payments, and then they're coming out of it, then how does that look? So we're going to have to stay vigilant. We will definitely keep doing updates Camp will continue to do updates on all of this. It's crazy. And again, somebody just threw in a question, how long do they think it will be offered? We don't have an indication of how long it will be offered. Mark Calabria had mentioned on a segment we did with Barry Habib like over a month ago that maybe it could even be the end of May. Obviously, that didn't happen. So they're probably just playing it by ear. It is 11:59, Rob. We are totally going to have you back soon against your will. I don't care, whatever. So I just want to thank you as always. You are amazing, and our industry is lucky to have you. And I hope if Shauna doesn't come and bail you out, I will. And people are asking about about Myrtle. So and her twin.
Large and in charge. All right, Audrey,
yeah.
Kevin, we'll talk to you later.
We'll see everyone. Look at the website to join, www.thecampsite.com, and look at all the recordings from all of our webinars are on there. You can join camp, you can renew your membership, and you can see what's coming up next. And next Tuesday's update, you're going to be happy. So sign up. All right, I'll talk to you later. Have a great day, great week. Bye.